ARB Holdings is a distributor of electrical products with a market cap of 1 billion rand. In addition to its stores and its wholesale division, the group also owns Eurolux, a seller of light fittings. ARB has a price to earnings ratio of 13 and a dividend yield of 3%. And I'm sure I rile up management every time I call them ARB Holdings, but there you go.
Yeah, I'm sure they don't mind because ARB are the founder's initials, Alan R. Burke. And he is the controlling shareholder. I think he's got like 52% of the shares. Fairly recent listing, Durban-based company, but a nice operation. He's now the sort of semi-executive chairman. He's taken a friend of his or a guy who was doing financial work for them, a corporate financier, Byron Nichols, and made him the CEO. But operationally, it's done well. And it's one of those companies that's benefited from sales to, you know, all the rural electricity authorities as they've proceeded to do all the build out. And the Eurolux acquisition, slightly different business because Eurolux mostly resells imported light fittings that they bring in from Asia and elsewhere. But all together,
the share price is not doing badly here.
Yeah, look, this is only a one-year chart. It would be nicer to see the full chart since it actually listed, because that would show you that it started off quite high because everything was booming back then.
Higher than that 5.
Yeah, much higher. I think the all-time high was like 5.70 Rand. Yeah, okay, a little bit higher. Then it goes all the way down to 1.20 Rand, somewhere back here, and now it's in recovery phase up to around 4.70.
Craig, we've just discussed the graph. Your thoughts on ARB Holdings?
Yeah, so look, I think in the last 2 years it's actually done extremely well. It hasn't been arbitrary results. Just on that pun, we didn't discuss the abbreviation on CAFCA, which is CAC. But
let's pass
a very
over that
interesting
one.
Company. In fact, what I like about it is it's sitting on a lot of cash, 180 million. And I challenged Brian Nichols in the sense that have they actually done anything? Is it a lazy balance sheet? And he made an interesting observation that 120 million has been used after the listing to pay down debt, and about 170 million was raised, because I'm saying, look, you're sitting with the same cash as when you came to market. But he did a calculation for me that they've returned 60.25 cents per share plus another 13.7% now in dividends, which equates to about 142 million. They've made those other acquisitions, which is equate to about 104 million, and there's a 31 million acquisition in the pipeline. So there's two sides to the argument. One would say, well, they're sitting with a lot of cash, but if there's acquisitions in the pipeline, it makes an interesting story. They're also sitting with a lot of property, which I think people don't always think about. Property is worth about 140 million, which is about 60 cents per share. So if you take out the property and the cash, you're left with a share price of just over 3 Rand or so, and then the PE comes down to under 9, and the valuations start looking a little bit different. Also looking at
sounds as though you can get excited about this story with that property underpin.
Yeah, absolutely. And I think, look, cash isn't getting much of a return, so that's not exciting. So maybe just discount the cash on the property. They have got a 40% dividend cover sort of ratio. So if they continue to pay those dividends, and they have paid a special dividend in the past, and let's hope for one in the future, if they can't do anything with the cash, then I think that's just good to know. But if you value the rest of the company, stripping out those underlying components, and hopefully they make some good acquisitions going forward, and I think it could be quite interesting. It's a timing matter though, because the share price has run up quite a bit, but I quite like the story, and I see more value than where it is at the moment.
Paul, anything to add before we go to Hot or Not?
This electricity distribution issue is interesting because obviously a big effort was made over the last 20 years to extend electrification supplies to urban township areas, mostly with overhead cables in a fairly informal sort of fashion. You know, you see the poles and the wires going everywhere. As the economy evolves, though, there's going to be more formal rewiring of those areas, and I think the political dispensation for the electricity industry has improved. The National Planning Commission recently ruled, if you can say such a thing, on the idea that the big municipalities should dominate and lead power distribution in the urban areas, which probably mean that sort of transaction-based consolidation of the electricity distribution sector lies in the future. So I'm quite positive that this money will get spent, because a lot of money is being gathered from higher electricity tariffs. Much of that has to be paid to Eskom, but in an environment of rising prices, as you know, you can fatten up the margins. So I do think this is a good space to be in, and of all of the companies with a market cap just putting its head above R1 billion, well-settled kind of management team, this is one of the better ways to play that investment theme.
So Craig, let's go to hot or not from you down in Cape Town.
Yeah, no, it's hot. I think my valuation's about R5.40 or so, as it currently sits, so it's hot.
With a R5.40 valuation, hot or not?
Yeah, I said yesterday that my rule of thumb was nothing under R1 billion was regarded as hot. This one's got a market cap of R1,070,000, so I'm going with hot.